Has DataDash now completely lost the plot, or is Bitcoin heading to a new bear market low?
That if this level does not hold, it's going to be the likely sign that we are moving much lower to its deeper price and potentially coming back down at least to the lower band here around 17,500 to 16,500. I don't think that's far out of the question whatsoever.
$16,000 to $17,000 Bitcoin. Do you really think that that is going to be possible? Well, I'm Ben, if you've not been here before, and I've been trading crypto rather successfully since about 2017. And back then, this guy here, DataDash, used to be one of the best YouTubers to watch. And right now, nothing much has changed. Now, this video is not at all to sort of bash DataDash for being wrong or anything like that. This is more a learning opportunity for you and me and everyone, including DataDash, to learn something. I always like to watch lots of different YouTubers that have a different opinion to my own on the market, because that way I can get a more balanced approach to my trading rather than getting too bullish or too bearish. And this is the reason why over the last 3 or 4 months I've been watching a lot of DataDash videos. And it has been some pretty painful viewing. Now, towards the end of this video, I'm going to be sharing with you my own personal take on Bitcoin, my own analysis of the Bitcoin market, where I think it's going to be going over the next 12 months and also in the near term as well. But before we do that, obviously, we're going to go take a look at DataDash and just why he is so confident that we have not yet seen the bottom in this bear market.
That is what I'll say here today. The vast majority of those returns have come in, and I think we're seeing some clear signs that this is not the beginning of another bull market. Now, why am I so confident in this? Because it's not just Bitcoin. And to wait until we get the clear signs of easy money coming back into the equation, where the Fed is on our side. The Fed is not on the side of the bulls. It is on the side of the bears now, as it is continuing to contract monetary policy at the most rapid rate we have seen in a long period of time. Probably never before to this degree in the Fed's history. It's all about preparing ourselves and not chasing every opportunity, not falling victim to potential market manipulation and thin order books that can easily deceive market investors.
That's right, guys. Do not be deceived by your own eyes. This bull run, it's not real. Just don't believe it. It's a fake pump.
Now, while there's a lot of value analyzing Bitcoin's chart and taking a look at the daily, the weekly, the monthly time frames, which generally show us that we're in a general downtrend, I think
that's right, guys. You heard it right there. What you can see here is a general downtrend for Bitcoin. That's the price going down. Now, in all fairness, we all get things wrong from time to time, particularly on YouTube. We often misspeak, say things that we don't really mean. I certainly do it an awful lot. But in this next instance, you're going to see DataDash not just say once, but twice, and definitely confirm that this is what he believes. It is completely wrong.
Take a look at the VIX here. The VIX is yet again in its support range since as far back as November of 2017. So is this really the time? Again, we understand that volatility moves inversely to stock prices in the vast majority of cases. So if the VIX is this low and it's at historic support for the last 5 years, likely means it's going to rebound. And if the VIX is rebounding, volatility spiking, that means equities are going to start to move lower. We've been remaining patient since.
Right then, gents. So what you're looking at right now is the VIX. This is what DataDash was talking about, and it is a volatility index for the S&P 500, just as it says right up there. And what it does is basically it measures the price volatility, as you'd expect. So every time the volatility goes up, what DataDash is saying is if the volatility goes up, the price on equities, i.e. stocks, will go down. So as he said and clarified, he believes that every single time the VIX goes up, it acts inversely to stocks. So the stocks will go down and vice versa. This is the S&P 500. So what he's saying is it's really, really low right now. So as volatility increases, the price should come down. And looking at that, basically right now, the price should likely come down on the S&P 500 and come down, retest this bullish trend line right here. Now, if we have a look at the Dow Jones, you're going to be seeing the same sort of thing. So you can see it's come up here, to this downward trend line, having broken through the previous bull trend. We came up into the pockets of these areas over here, these resistant areas, so you'd expect it to be coming down. But the thing with the VIX is volatility works both ways. So just because it's going up, it doesn't mean that stocks will go down. It just means that the price is really, really volatile. Now you can do exactly the same thing with Bitcoin. So with Bitcoin, you're going to find this chart right here. It's called the Bitcoin Historical Volatility Index. So you can get that on TradingView, and you can see right here. So this is April 2023. You can see how it's been going up and down. In fact, let's just change this now to a daily chart. You may be able to see it a little bit better now. So March, you can see the price went up. So volatility went up, but the price in Bitcoin also went up in March, as you can see, right? The price went up, volatility went up. Volatility, the VIX, or the volatility index of Bitcoin. Basically, if volatility goes up, it just means that price is going to be moving very, very big in one direction or another. So now let's just take a look at DataDash's predictions and how they've changed over the last couple of months.
Sign that we are moving much lower to its deeper price and potentially coming back down at least to the lower band here around 17,500 to 16,500. I don't think that's far out of the question whatsoever. I would recommend watching for price to come down into that green band of support. This will start to slowly rise over time. So look for price levels somewhere around 22, 23,000. I would not doubt that we're going to at a minimum come down here towards this range of previous resistance at around 24,500. Don't doubt that there will be corrections along the way if you're believing this is just that broader Bitcoin bull market.
It's funny sometimes just how much a prediction can change given 1 month, but I've got to say I think it is a lot more reasonable, a lot more realistic that we're going to see Bitcoin heading, I would say, around 25k over the next couple of weeks. But first of all, let's go and take a look just why DataDash himself did not actually buy back Bitcoin when it was really low, like back in December and January when it was low for a long time. But he didn't actually buy it in there, even though he only sold out last year when the prices had fallen to 25k.
Still waiting on the sidelines, and I'll explain why that is. We've been in cash here since around $25,000 back in August. Why are you going to be going short now? I want to go ahead and explain the reasoning for this here. And the reasoning is not because I hate Bitcoin. It's not because I don't believe in the potential promise of crypto as an asset class. None of that has to do with the case. And to the question of why I didn't ride the wave up during this relief rally is because of a very important principle. I like to trade with the broader trend. And when I say this, I mean that when we are in a secular bull market, right, when Bitcoin is continuously having consistent bear market corrections, we know that the Fed is constantly injecting new liquidity. That's the narrative. That's what drives prices higher, increased credit in the economy, and disposable income is going to lead towards speculative assets going up over time.
All right, so now that we've seen just why DataDash did not buy in, let's see why I did buy in around the early part of this year. And it was back in January where I was making this free little 3-day course for you guys. Basically, anybody that's kind of new to trading and wants to start making some profits by trading crypto. This is what I made: strategy, macro plan, and how to actually automate those strategies and make some money. So there's lots of hours worth of footage there, all absolutely free, and basically shows you over those couple of hours kind of what I'm going to show you right now. So this is like my long-term macro outlook for Bitcoin, and Bitcoin runs on a 4-yearly cycle, which begins every single time you have a Bitcoin halving. So that starts a new 4-yearly cycle, and this is how I sort of split up those chunks. So what we have at the beginning of a cycle is a euphoric phase, okay, which then goes into the red phase here, the fantasy phase, where the market all goes back down again. Then we got the apathy phase where it sort of bottoms out, and that's where you see the absolute lows of the bear market before you hit this phase here, which is the venture phase, which begins 1 year prior to the Bitcoin halving. And as you can see here, the Bitcoin halving, the price at that time was 9,400, and the price when we began 1 year prior, 12 months before, was 5,000. So it's pretty much doubled over that time. So that means if that was to happen again, right now it's 27,000 when we got to the 1 year prior to the Bitcoin halving, which means, you know, you're looking at, like up here, 54,000 by the time we reach the next Bitcoin halving in 12 months time. And going back here through Bitcoin, you'll see the same sort of thing happening over again. Look at this, Bitcoin $288, can you believe it? And that obviously doubled there to $600 by the time the actual Bitcoin halving happened. So this happens time and time again. The other thing that I want you to see is during this phase, which is the green phase here, price, it may drop down a little bit, but it doesn't ever go underneath the price that it was before at the absolute bottom of the market there in the apathy phase. You're always going to stay above, and you should see a gradual increase. Now, this didn't necessarily happen back here because it was 2020 and we had a worldwide pandemic, absolute massive shutdown of every single business around the globe, complete economic crash, and Bitcoin as well as gold and oil and everything else went all the way to well, down, but not as bad as oil, which went to minus $40 a barrel, if you remember. So they do say Bitcoin's volatile, but obviously not as volatile as some other assets like oil. But yeah, generally you should be going upwards though over that period. So just because we're starting out here at 27 doesn't necessarily mean that we're just going to keep going up all the way over the next year. We could even go below this line here. This is the 120-day moving average, this golden line. And you can see here that once we fall below it, it tends to act as resistance. So it's kind of hard to get back up above. You can see here, 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 where it hit below. And then once we was above, it actually became a support instead. So this is where we bounced off over here. And this happens all the way along. So you can see it's support there once we've broken above, and all the way up, barely touched it until this point here, and then it becomes a resistance point. But during the venture phase, this green phase, it doesn't actually necessarily mean that we have to stay above it because we're not yet in euphoria phase. Okay, so we're not euphoric, which we're very unlikely to drop down. We did hear because of Elon Musk and something to do with Tesla at that time. I don't know if you was around back then. I'm sure you'd remember if you were. But basically, during this phase, it can go below, and that's just fine, particularly if there's a global pandemic. But it doesn't have to. So this phase here, we only actually dropped down for a little bit under the 120. Then we were more or less above it the whole way, just going higher and higher all the way up. So it's a great little indicator to check out. So that was like my macro outlook on Bitcoin. This is more zoomed in on the 4-hourly chart. And what you can see here is basically that we came down here a few weeks ago, down to the 120-day moving average. That was the bounce that you saw earlier on. And we came down under this green line on this envelope. So all of the lines that you can see here are basically on the 7-in-1 indicator, which we give out to all of our members here at Moocher Ninja. And in a nutshell, if you've not seen any of our videos before, basically I like to sell it off if it comes over the red and buy it up whenever it's underneath, more or less. So obviously we're in bullish zone right now, so we're above, the price is above the 120-day moving average. So as soon as it came above here back in January, where I was making those videos that you just saw on the satoshitrader.com site, so as we broke up above, that's where I knew that we were just going all in on Bitcoin at that point. And then when it came down here and hit the 120-day moving average, absolutely you've got to get in at that point. But because we're now bullish, that doesn't mean that because we're breaking above the red line here that you're just going to sell everything out, because we're still in a bullish sort of phase. So you're going to sell off a bit, but when you come down to the 120, you're going all in. And that means that if at this point here, we do continue downwards and sort of meet up with the 120-day moving average as it's continuing upwards, and at some point we're going to meet around here, which would be $25,000, then at that point I would absolutely again be going all in, and you can see the green line here would be coming down, so maybe just like this would be below the green and hitting the 120 at the same time. But that does not necessarily going to happen. We may not make it that far. Maybe price is only going to go down to here, down to the 50, which is again still at this point down below the green line, so that again would be a great place to be buying in as well. So lots of opportunity there for it to go down to 25,000. No guarantee that it will, but what I myself am actually focused more on right now, rather than just buying Bitcoin, is finding other altcoins which are going to outperform Bitcoin so I can build on my Bitcoin, because Bitcoin is pretty flat. It is not that volatile compared to other cryptocurrencies. So I'm really looking at more volatile assets to grow that Bitcoin. And if you want to see more about that in the coming videos, then do like, do subscribe. I'll see you in the next video.